Hi everyone, Paul Duncan here. It's Sunday, October 18th, and I wanted to give you just a brief update about what I'm seeing in the overall markets. So jumping right in here, this is the cumulative tick chart that I have. It's got three primary presentations on it. The top one is 52 new week lows, so 52 new week highs and lows. Green is the highs, red is the lows, and you can see that on Friday we had a transition where greens were above red, whereas we had a couple of days prior to that where the new lows were outpacing the new highs, except at the end of the day. And you can see we've been back and forth with this. So we started the week in that mode. We had a little bit of weakness in the middle of the week, and then Friday we ended pretty strong. If we look back in time here, as I scroll back to the left, you can see it's been pretty consistent. It's one of my criteria for jumping into the markets, and it's a pretty big deal. You can see though that we've had going up into this as far back as what is that, 10-2. We were 52 week new lows were outpacing new highs by a considerable amount, and then it was only after we got that major buying signal later on 10-2, and that would continued on 10-5 the following Monday, that we actually took off. So we've been under that signal since then. We've been looking pretty good, and I think this is going to be indicative of what we're going to see. We're going to see some weakness, and then we're going to see strength, possible buying opportunities, and continued strength. The middle chart here is just my algorithm detector for buying and selling. You can see that we started on Thursday, started some pretty serious buying, which caused this uptrend in new 52-week highs. And you can see at the end of the day on Friday, we started pretty strongly, ended pretty strongly. So I'm looking pretty optimistically on the markets overall. Bottom chart here. This is a moving average of the cumulative tick. The white is the instantaneous, and these are various moving averages in the middle. The longest one's here, the shortest one's up here. And you can see in general you've got the nice fan pattern here. They're not crossing each other, or they're moving from lower left to upper right. This is a buying market, and this is pretty good. I'm looking for the white to actually collapse below the red as a potential sell signal. And when that occurs, then you get stuff that looks like this, and that tells me it's time to get out of the market. We're not there. We're looking good, and overall I think we just want to continue doing what we're doing. From a perspective of the long cash ratio, the long cash ratio is basically a measurement of all the stocks in the database with a long recommendation versus those with a cash recommendation. And you can see a lot of green here, and the green is measured across multiple time frames. These are the slopes of the long cash ratio, so the day over day change, and we're very positive. And we've been positive since, let's see, what is that, 10-7. The initial signal came right around 10-2 as you saw earlier, and then it was followed through on 10-5, which is what this is telling us. Over here on the right hand side of the table, we've got some red that has occurred. This is the weakness that we had this week, but we ended the day strong on Thursday. We had a little bit of weakness on Friday, nothing substantial. It certainly didn't go across all of the measured time frames. This is the slope of the slope, so this measures the change of the slope. So think of it as acceleration. How fast are we going up? How fast are we going down? The key that you want to take away is that you have to have green before you have green over here. You've got to change direction. If you're going down over here, you've got to change direction, and that's what this is telling us. And then when this is green for a while, then we get green over here. The converse of that's true too. When we get red starting over here, you'll start to get red over here a little bit later, and so you can see how that works. So I'm always watching this. As I start to see red develop on this side, I'm expecting red to develop on this side, and that's where we are today. From a timing perspective, we're looking pretty good. We had a little bit of weakness this week, as I said earlier. On Wednesday, we had a flip back to a cash status on an intermediate term timer, but the short term timer is still very much long. And Thursday and Friday ended strong, and we're looking at now a 33% cash position overall within within the market. So saving a little bit of cash, but overall I think we're looking pretty good. The long-term timer, we're still in a situation where we don't have a full committed signal, and that's just because we've got some ways to go yet on before we get to breaking out of historically a negative range. So we're almost there, not quite there yet. I think as soon as we cross this zero line here, we're going to be in pretty good shape. So we've got a little bit of work yet to do. We'll probably pull back some here, and then as the earnings season wears on, we'll probably come up and get very, very close to a long-term trend call. So I think we're looking pretty good there. From a GGT perspective, everything's been updated. So if you're a member of my Dropbox, you have access to these files. Effectively, what you're looking at here is you're looking at the dashboard tab, and the dashboard tab has all of the stocks that are in different portfolios that what are effectively different selection criteria. So you're looking at dividends, bargains, leaders, dividend champions, which are quality stocks over a much, much longer time frame, low beta, which has been hammered recently. And then just simply because of BOFI here, I don't know if you heard, but BOFI lost about a third of its value this past week due to investigation. And then the quality stocks out of that come out of this. Notwithstanding, they are all long-rated stocks at the present time. The portfolio tab contains what I'm actually invested in, and you can see in Collective 2 we're doing very, very well. We only have one position that is slightly underwater on the Greenfield dividend portfolio that's listed there. Greenfield leader portfolio there. It's a little more difficult getting started here. We've got some positions that are underwater, and I'll be selling the position here that you see here in MMI. That's going to get unloaded on Monday. The other positions that I have in my other portfolios, or other accounts I should say, the 535 account is following Greenfield dividends, as is my 567 account, as is my 790 account. So I'm almost fully committed into the Greenfield dividend portfolio right now with my personal monies, only because I believe we're in a defensive market, and I'm interested in the dividends that they're paying out, but these are all good quality stocks. When we take a look at just the overall stocks in general, let me flip over here to a screen. The leaders are looking pretty good. So the new leaders list, which is also on in the dashboard tab, Greenfield leaders. That's these stocks that you see right here. Those are the ones that are listed here, and you can see that they literally are Greenfield, right? That's hence the name. And what we're looking at is, is the price over the 200 MA, is the slope of the 200 MA in price positive. Same thing with the 150. Is the 150 above the 200? Is the 50 above the 150? We're looking at, is it in the top 25% of the 52-week trading range? Is it well above the lower quartile of the 52-week trading range? And if those are both yes, then this turns green, and hence we've got some really, really good price performance. In fact, we can take a look at one of these if you'd like AESET. You can see it's doing pretty well. It set a new 52-week high not too long ago, which is this red line here. And you can see that all the moving averages, it's well above its moving averages and doing pretty well there. So it's a good way for me to screen stocks, and I completely believe in it. I'm really focused on this area here, which is the revenues of year over year and the EPS on a year over year. I need both of those to be green. And so as you look at different stocks, whether they be the bargain stocks, you're going to see a lot of green in the middle of the chart here. Price action may give us some opportunity to move into things, but the fundamentals that are illustrated here in the middle absolutely have got to be evident and ever present. Anything that has a red in here is automatically rejected. The dividend stocks, dividend champs, those dividend stocks are paying pretty common yields that you would expect, but again, note the middle here. These are all quality stocks, not necessarily rocket performers, as you can evidence by over here, But the key that that you should take away from this, especially when I sort on this artificial score that I've created, that the best stocks are at the top in terms of their overall performance relative to the 200-day, the 150, etc., the criteria that I went through before. But they all exhibit really, really good criteria in terms of revenues, EPS, and year-over-year dividend change. So we're seeing increases on all of these stocks. Hence why I'm focusing all of my monies into these particular areas. So looking forward here, your crystal ball is as good as mine. I think the thing to take away is that we've been in this period here over the last since the second, where we've come up quite a bit. This is actually the looking at the futures. S&P 500, and you can see, we took off at the end of Thursday. Friday we kind of digested these gains. End of day we took off again, and your crystal ball is as good as mine. What's going to happen on Monday? We may drop down. I do think we are in somewhat of an overbought area, and for those of you who get the GGT files, you may be familiar with this chart that is on the metrics tab of the stock file, and you can see we're entering overbought territory. We're at 55.1 historically is the calculated bottom level of this, and with Friday's close we're at 55. So statistically we're there. This typically is not a good area to buy stocks on the long side, so I would be very cautious about jumping into the markets full force until we get back into the green, and certainly buying when you get good indications below the solid green line here is a good thing. But I'm expecting we're going to pull back, and then we'll continue back up, and we'll do these cycles as you see here. So stay tuned for the week. Your crystal ball, as I said, is as good as mine. I'm just listening to what the recommendations are for the overall stocks that are listed. Any stock that moves to a red status or a cash status will be sold using a 1% trailing stop loss. And if it's in the dividend portfolios, I'll select stocks that are performing very well from this overall list. And you'll see the orders go out in the collective too. So if you've got any questions, don't hesitate to send them my way via the Yahoo group or on the blog. So with that, I'll leave you and have a good evening.